Hello, everyone, and welcome to TradeFinder Live. My name is Zach. I'm one of the team here at Elliott Wave Options, and I'll be facilitating this session tonight with Rob Roy. As always, we need to cover off some important housekeeping details about the session, and then I'll introduce Rob. All right, so first and foremost is our live disclosure disclaimer agreement. If you've attended any of our live sessions previously, then you've seen this. The main thing to take away from it is that we are not licensed investment advisors in the United States, so nothing is to be taken as personal investment advice. We do have this available on our website if you'd like to read it in full detail there, or certainly feel free to take a screenshot of it if you like. That's the main point to take away. All right, so for those of us that have been around for quite some time, we already know what the process is for the questions. However, for any of us that might be joining us for the first time, we are live streaming to multiple different platforms. So Rob goes through his general presentation, goes through some case study considerations, and with the time remaining, he will open it up to a combination of questions from all of the live stream, all the platforms we're live streaming to. So we will do our best to get through as many questions as we can, but due to time limits, a lot will slip through. And so with that understanding, take that as encouragement to attend the insiders meeting on Thursday when we have a 45-minute Q&A portion solely based for our subscribers. And Rob usually gets through almost every single question on that session. So if we don't get to your question tonight, just know it has nothing to do with the validity. We just only have so much time. Lastly, we have the chat window. So for any support related queries, I can handle there. And of course, for any interaction amongst other attendees, please feel encouraged to use that window. Just make note for our Zoom audience, by default, it goes to hosts and panelists. So if you would like everyone on the webinar to see your message, be sure to change the to everyone instead of hosts and panelists. Final note for that is that if you would like Rob to potentially address your question, be sure to write it in the Q&A window and not the chat. All right, well, with the Bank of Japan yield shift, rocked the futures overnight, but we still market finished to the upside. And so I'm interested to hear Rob's thoughts on that and looking forward to interacting with you all. Thank you for joining us for this live session. At this moment in time, I'll introduce who we're all here for, the man of the hour. That's Rob Roy.
Thanks, Zach. Hey, everybody. I thought maybe you liked the intro music so much, Zach, you were going to let us go through a whole nother round of it. Here's the camera. Everybody wants to see the dragon capsule. So as Zach said, we'll go through and talk about the markets, international markets as well. A few of you have written in with questions that you'd like to talk about. So we'll go through and talk about those. We'll do a review of any closed Elliott Wave Options case study alerts. We've had closed profitable trades in all of our portfolios recently. So we'll go ahead and take a look at one of those. We'll go through and review previously identified case study considerations in past trade finders. There's a few of those that could still be considered open. And then we'll look and see if we can find one for tonight. And then Zach's already done a really good job of explaining the Q&A at the end. So I won't go through that. Let's just go ahead and jump into it. I know we're getting close to the holidays. Everybody has time constraints. So let's get moving. As Zach mentioned in the intro, we did have the Bank of Japan overnight did what they call a yield shift, where normally it's like 25 basis points that it can waver, and then they increased it to 50 basis points either way. And that sent shockwaves through all the bond markets. Last night I was watching the futures, and we were down almost 300 points on the Dow futures at one time. We kind of rallied back, and then it seemed like not much of an event in the equities market, but it was in the bond market, and that's what I'll show you here in a second. So as far as the equities market, little slight close to the upside. If we take a look at the moving averages, we talked about this in our at the close shorts that we do on YouTube. If you're live streaming, and by the way, welcome to everyone on the multiple live streaming platforms, social media platforms that we send out to now. Thanks for joining us. If you're on YouTube and you haven't visited our YouTube channel, please do so at Elliott Wave Options. But on the shorts that we do, just a real quick, because they're in the shorts, right? Market update. Yesterday, we talked about how we were a little bit oversold, even though at the completion of this zigzag pattern, what normally happens is you retrace the C wave. So if we take a look at that, the eventual target would be to come back down here to 370. That's where I think we're going to come down, and we'll see what happens when we get there. However, in the short term, we are oversold. So a little bit more of a bounce is warranted. And we did get a slight bounce today. Now, after hours, we had good earnings from Nike, and Nike's up nice after hours. We had a miss from FedEx, but it's up after hours. And at this moment, the futures are up 21.5 points. So perhaps we open a little bit to the upside again. And maybe, I mean, we can bounce all the way back to 390 just to get back to the 10-day moving average. So that's how oversold we are short term. I do think that we come down to this 370 level at some point, but perhaps in the midterm, we bounce higher. Now, in last week's TradeFinder, Zach posed the question, which of the gaps get filled first? Because we had a gap down here, and then we ended up with another gap. Well, we got that answer. We've filled this gap. So this gap that occurred back here between 11.9 and 11.10, that gap's been filled. So that upward gap's been filled, but now we have these two on the way down. When are they going to get filled? And we'll have to let the market tell us what the answer is going to be to that question. But we do know which one got filled first on the way down. So let's take a look at volume. And as you would expect, as we're starting to move into the holiday season, volume begins to dry up. So we had lower than average volume yesterday, even lower volume today. I don't know, unless something really unusual happens, that we pick that up. We had a lot of news about, China opened up, but then they've got a spike in COVID cases. So are they going to shut down? It seems like they're now ready to do kind of the herd immunity thing, where they're just going to let it run. They're gearing up for shoring up the hospitals to expect more cases. The concern in the US came out with the news of, well, if you get a spike over there in China, then that promotes more variants. And we're probably going to see some sort of a spike here in the US as well. Although when these variants come out, they seem to be less deadly. So, people getting sick, but not a super serious concern, unless your immune system is compromised, and then then it's always a problem. But that's, all that's negative stuff that's coming out, right? And yet the market kind of clawed its way back with everything. The Bank of Japan freaking out the bond markets. Then we have this news of China, and it's expected, right? They've been shut down, and when they open back up, I'm not sure what they felt was going to happen. But the cases doubled from yesterday to today. So they're looking at another potential spike. And then, of course, the U.S. warning of more variants likely to come, and a spike in cases here because of that from the variant standpoint, and just on and on and on. It just continues. COVID just doesn't seem like it wants to go away. But hopefully China continues in their approach to not shutting things down. They've realized, I believe, at least that's what some of the news markets are saying, that they've damaged their economy significantly by the complete shutdown, and they seem content this time just to let the virus run its course. But who knows? Everything could change on a moment's notice, but that's where we are right now. So lots to talk about as far as what's going on geopolitically. From a technical standpoint, again, tiny bit oversold. Well, not tiny, a little bit oversold at this point in time. So, move from 380 to 390, it's 100 S&P points. It's not insignificant, but, whether or not we just go sideways and let the 10-day moving average come down, or we bounce, that's going to be the question to close that gap. But that gap will get closed. And perhaps if the futures can stay strong, then maybe we close it enough in the morning, and then we really see what happens from that point on. So not much else to say about the S&P. Take a look at interest rates. That's what I was talking about. There's where the effect was of the Bank of Japan's yield shift. Interest rates jumping back to the upside. And so that's not a positive thing. And that was kind of what was causing the futures to be down so much last night. Looking at the 10-day moving average, we've gapped up above it. We're back above the 50-day moving average, right at a 56% wave 4 correction. Is that going to be it? Are rates going to start going back to the upside again? Maybe. And then there's all kinds of speculation of, what China does, How's that going to affect the supply chain? How's that going to affect our economy and inflation? What's that do to the Federal Reserve? Most people are thinking that it just made the Federal Reserve's job harder. You know, there's a lot of negative stuff out there. And then somebody had written in and sent me a chart of the put call ratio, which is a good sentiment indicator. It doesn't tell you when sentiment's going to turn on a dime, but it's getting up there. And when you get the put call ratio above 1, basically, if you're not familiar with it, it's exactly what it says: put to call. How many people are buying puts to how many people are buying calls? And the idea is when as many people are buying puts as buying calls, and that's when it's 1.0. So when the put call ratio is 1.0, there's as many puts bought as calls. That's unusual because people are inherently bullish. Most days, more calls are bought than puts because over the long haul, the market goes up, right? I mean, we have periods of corrections, we go into long periods of recessions, even, you know, a depression, etc. But then over the long haul, the market comes back and it goes back to the upside because money is constantly moving into the markets. So the put call ratio is usually below 1. So when you get it to 1.0, that's unusual. That shows you that there's a whole lot of put buying. That means that bearish sentiment is at an extreme level. And nothing else really matters when everybody's on one side of the market. No matter what's going on, the market tends to go the other way because that's the path of least resistance, and the real smart money turns things and we go to the upside. My point is that at some point in time, even with all this negative news that's out there, we could have a rally. But it's not quite to the level that I would consider. Some people are saying it's extreme now, but I don't think so yet. But I'm more in the camp of we're oversold, a bit of a bounce here. Even if it lasts to the end of the year, the Santa Claus rally between the Christmas holiday and New Year's, that could be enough to get us, you know, we could get a bounce from this point through the end of the year. We could sell off too, because 2018, look at what happened on Christmas Eve that day. It's very difficult to trade directionally right now. Just with all the cross currents, with the Federal Reserve, you know, raising rates, trading directionally is extremely challenging. If we take a look at the dollar real quick, see we're at a 50% roughly wave 4 correction, almost to that level. So push the dollar down, push rates up. That's kind of a wash. Had the dollar sprinted to the upside with interest rates to the upside, I doubt even with being a little oversold, we could have finished to the upside today, but perhaps, who knows? All right, let's take a look at some of the other markets. On the diamonds, and we've been talking about who is the real leader. I mean, the SPY seems to be in between. So we had the diamonds that had moved up. They relabeled to a wave 3. Now they've corrected. Now we're at a 50% correction in the diamonds. But look, we're below the 50-day moving average 3 days in a row. Now we're a little bit, now there's where we're a tiny bit oversold, a little bit more oversold on the S&P, but still a little bit oversold on the diamonds, but below the 50-day moving average 3 days in a row. You know, if we send and we do this on the S&P, then maybe we don't get a Santa Claus rally. But there's the support resistance level there at 330 on the diamonds. We've talked about that so many times over the last several months, how important that level is, but we're trading below it. So if we're going to have any sort of a Santa Claus rally, we got to get back above that level and then see how far we can go. I don't think this wave 5 target comes into play by the end of the year unless we have a sell-off first and sentiment gets really ugly. Well, then we could. But I think it would take a lower move on the wave 4 for that to occur. And then looking at the Qs, and so I had some people on YouTube saying that the Qs are the leader. They may be, because look at that. The wave 4 went to 61.8% and has just been straight down since. Also oversold on the Qs. Not really a doji, but in the neighborhood of one there. But we're kind of in no man's land. We're in between 280 is a support resistance level and 260 is as well. And we're dead in between. So not too much indication from support resistance, just the fact that we're a little bit oversold. But if we break that 260 level, I do think we hit that wave 5 low on the Qs. And I know you're going to ask about it, so I'm just going to bring it up now. I was going to do it a little bit later on. But Tesla y'all kind of made some comments. They have on our Thursday Night Insiders as well. I've been saying that I didn't think Tesla was done selling. You've heard me say it. Go back and watch the recordings if you haven't. And on this one, I was right. I'm wrong a lot, but I was right on this one. And you know it if you've watched any of these recordings. I've been saying I don't think Tesla's done going down until we get back above 200. And now we got to get back above 180 before we can even look at 200 because of this level here. We're starting to get to the point now where I think you're getting to, okay, now we're starting to get down here pretty significantly. I didn't think we would move down quite this fast, but today was really ugly for Tesla. And now we're getting in this range of the wave 5 target, and we've already moved it from where it was, and then watch this, boom, right to there. And so if we walk it back a little bit further, you can see that there was the original target. Well, we blew right through that, and then we moved to the new one, and now we're within the tap box on that. So we're within the wave 5 range here. So I think we're getting close to the point where maybe we can get some sort of a bounce out of Tesla. But man, it has not been good. And this is the problem. If you're long Tesla, this is what should be concerning you. And this is what I've talked about as far as, I know some of you made the comment that the new Cybertruck would give it a boost, etc. But I talked about how the institutions aren't going to want to lose their gains in Tesla. And as it starts to come down and they start to realize that their gains are dwindling significantly, they get out. They don't want to lose those. And so when you start to see this kind of volume, way above average volume consistently, that's the institutions bailing. They're getting out, they're taking their gains, and that feeds on itself. And it doesn't matter what the news is. It doesn't matter if Elon steps down from Twitter. It doesn't matter about the release of the Cybertruck. None of that stuff matters anymore. It's becoming this snowball effect to the downside as institutions get out, and then other institutions need to follow because they don't want to lose their gains either. And they see this way above average volume coming out. That's exactly what's going on. That's what we've talked about. Now, when does that end? When the institutional selling ends. That's when we'll put in a bottom here in Tesla. I do think we're getting in the area now. I think we're starting to get in that neighborhood. Anywhere from here, because we're within this wave 5 tap box, anywhere within here, Tesla can start to form a bottom. But that's been pretty ugly. That's what's going on. And we've nailed that one. Again, if you've been watching any of these recordings, much to a lot of people's chagrin. I know everybody wants Tesla. It's such a loved stock. Everybody wants it to go to the upside, but certainly hasn't worked out that way. And that hasn't helped the Qs either. So the IWM, the 170, 190 range that you've heard me talk about, ad nauseum. And now we're getting down towards the support area. We're starting to get down into the 170 range. We've been around 180 for so long. We gave it a look at 190 there a couple times, once in November, once in the beginning of December, and now we're back looking at 170, but staying within that range, staying within that trading range of the IWM. So see how that moves out. Bitcoin, yeah, gosh, and you have to marvel at it. It looks like it's going to sell off. It looks like it's going to tank, and then it holds, and then it comes back, and it's trying to get back up to make another run at that 20,000. Look like we're all right. We took a look at it and we didn't hold it. We're coming back down to 16, but held in there pretty well today. But we are below the 10-day moving average. So coming down to 16,000 is still a possibility. Well, if the market does start to have some sort of, the equities market does start to have some sort of end of the year rally, and you're wondering, well, with all that news, where could it come from? Well, one, sentiment, although I don't think it's quite bearish enough yet, in my opinion. But the other thing is the old expression, never short a dull market. And how do expressions become old expressions? Because they stand the test of time. And what that means, never short a dull market, means that when you have lower volume, the market tends to drift to the upside. Now, the opposite side of that is that when you are on lower volume, if something really negative comes out, you can have an exaggerated move to the downside. But that's the exception to the rule. It's possible, but that's the exception. Usually what happens is you drift higher. Can we do that this year? I don't know. If we had a put call ratio above 1, and we're moving into this, I say, hey, we're setting up for a pretty nice rally. And we may still get that, but I don't know if we're quite bearish enough yet. Everybody's trying to put in a bottom, and you get all this optimism every time the Federal Reserve comes out, and they've been kind of consistent on their hawkish tone. And every time a governor talks, they're hawkish, and yet we still are just waiting for that. The longs really just are itching for some sort of a rally to the upside, but the Federal Reserve has stayed true to what they've been saying, and who knows when that plays out. So the EWA here, taking a look at that, and that's not what you want to see. We've talked about 23 and getting above that level, trying to stay above that, and we couldn't do it. And that's what happens when you break an area of support. It's just like, yikes. And now we're below the 50-day moving average. And if we're not careful, without some sort of a rally here, I don't think we can even hold 22. I think we're down to 21, and possibly even after that, maybe down to 20. But we'll see how that plays out. How about a couple of questions for the XJO? I know we used to show that, and then we quit because so many of you wanted the EWA because it's easier to trade. But at least on the XJO, you can see wave 4 here. Can it hold? It's close to the 50% corrective level. It did bounce today, as you can see, but only back to the 50-day moving average. So just kind of corrected yesterday. Doesn't really mean much. We got to get back above that 10-day moving average on the XJO to see if we can form some sort of a rally back to the upside. But I do think that it needs the US to rally for that. Let's take a look at Canada with the EWC, and coming down here, I don't really see anything other than the fact that we're short-term oversold here, stopping Canada from testing 31 again. We're in no man's land. We're oversold. Tiny bit of support there at 32. I don't think it holds. I think it's short-term. I think we come back and test 31 again, and then see how that plays out from there. The INDA, so many people messaging about the Indian market. A lot of people have been looking at it, and understandably, because it's just been a pretty good performer. The key of 43 is problematic, that we broke below that. We're below the 50-day moving average there on the INDA as well. It's trying to sneak back up. If it can get back above 43 this time of the year, that might be a place to look if you're trying to find a place to put on a bullish trade. Not now, though. It's got to get above 43. So you got to wait. Because there's still a chance that we come down and test this level here at 41 if we can't get back above 43. But it's trying. You got to give it that. It's trying. So let's take a look at Hong Kong, and looking at Hong Kong. Little bit of a pullback, not that bad, considering. I think maybe this, the negative about the spike in the COVID cases in China hurt a little bit, but then this reluctance to go back on lockdown, I think, has helped put a little bit of a bid that helped it from being too significant of a drawdown. We are above, or at least traded right at, the 10-day moving average the past couple of days. And I think it's kind of for real, they're not going to lock down again. I think that could be a place, because all the China stuff has been so oversold, where that could move higher as well. I think everybody's on pins and needles to see if China changes their mind and goes back into lockdown with the spike in cases. That's going to be interesting. Let's take a look at the metals. Looking at the SLV, the Bank of Japan news put a little bit of a bid in the metals today. You can see this gap up on the SLV, and coming down here, just really was upsetting, because I was looking at this on Friday, didn't like to drop below the 10-day moving average, so held off. Been looking to do something long here, but held off due to the fact that it had broken below there. Just wanted it to get back above the 10-day moving average. Didn't want it to gap up like this, but that's what happened. And now we got to look to see if we come back and close the gap from the 10-day moving average, because all in one day, We went from below the 10-day moving average to slightly overbought above it. And then looking at gold, not as much of a little bit of a gap up, but not as much as you would have thought. And that goes back to the thing of, who's the leader, silver or gold? They were even joking about that on the financial networks today. I thought that was interesting because I thought we were the only ones talking about is silver, the new leader, and gold's the follower rather than other way around, big brother, little brother is the example I was using. But, back up to this 170 level. And if we can get above that, then maybe we have something going, but we've got this wave 4 here. We still have the 61.8% level to get through. So there's some resistance ahead on the GLD if it's going to try to rally and disqualify this 5 wave to the downside pattern. So I think you have to be a little concerned about that and hang on there a little bit. Somebody wrote in and asked, could we look at platinum? They've been hearing that platinum supplies are dwindling down. I tried to find you a good, if somebody knows of it, let Zach know, an ETF for platinum. This is one a lot of people like, but it's not optionable. And so if somebody knows of a good platinum ETF that's optionable, write that in. But we are at an area here. I mean, it's not that expensive. It's only, $9-10 here. But we did break back above the 10-day moving average. And you wonder, well, is that because of platinum? Supply demand issues, or is that just because all the metals rallied today off the Bank of Japan stuff? But it's certainly interesting right now. And if we could get back above 10, that would be certainly interesting, but it's not optional. But anyway, just wanted to share that with you. And then let's go ahead and look at oil. Maybe getting ahead of some of the questions that are going to be asked. But, just if we break, and I think we're in danger of doing that. We have the strangle and we're just waiting to see if we come back down. We got oversold down here at 62 before, bounce back up, have been able to hold 65 so far. But I really think that the whole demand thing, now the Nike news, is that an outlier? Because the retail sales number on Friday was not good last Friday. And, the whole demand thing is the consumer going to still spend as much. Amazon was the first one that said they see weak holiday season spending, and as I've been complimentary of them for taking the hit and coming out when others are saying no, they're not seeing it. Well, then you get something like Nike and you're like, well, either everyone's only buying Nike or maybe the retail sales aren't as bad. I mean, the US consumer is a pretty hardy being, but I don't know. That was a bit surprising to me to see the Nike news after hours. And you can, if you watch that or if you look behind the scenes, you can say you're giving them too much credit. A lot of the reason that, because some of the stuff was not positive on Nike's numbers, but their cost cutting has been significant. They've cut tremendous amounts of cost, and that's how they were able to beat their numbers to the point where they're rallying. And the point that usually matters, the margins shrunk because of increased costs. And that's why they've been going through cost cutting. So if you wanted to find something negative, you can say, I don't know that bounce in Nike lasts, because usually that's what people look at. What are the margins? And if the margins shrank, that usually crushes a stock on earnings. But then in the case of Nike, they're giving them credit for their cost cutting. But how long can you do that? What about next quarter? That's where we're going to see things. But hey, give credit where credit's due. But the other side of things is FedEx wasn't that great, and they're up too. So I don't know. Interesting there. I did want to show you one of the case studies that we closed out for our alert subscribers. This was on HLF. Now notice it was in the speculative portfolio, but it was a put calendar spread. This is normally what we reserve for our AI-based time strategy. But the issue here, if you can look at it, is the AI score was 65. And so when you look at that, the AI score of 65, what we usually look is 70 and above, and we like scores of 75. So we put it in the speculative portfolio. This is designed to go sideways, obviously with a calendar spread. And then we exited that 6 days later for 25%. Now, normally these time strategy trades are designed to go 18 to 21 days, and we capture time decay and we capture volatility. But with this one, to get 25% in 6 days was a nice return. So that worked out extremely well. And you can see from our mark-to-market graph, one of the cool things about these time strategy trades is it never really was at a loss. It never went below the zero line. And that's because we're capturing, we're selling a put as well as buying one. So the time strategy there, we sold the 16 December put, bought the January one, and it worked out really, really well. But because the score was lower, we put it in our speculative portfolio, which is where, hey, we like something, but it doesn't quite follow all the rules that we publish for our other primary portfolios. So it goes there. And then it's like, okay, our subscribers know this is speculative. If you intend on following one of the portfolios or all of them, if you want, we have an opportunity for all the portfolios at a discount, but then you can choose to do it or not. But that's why it was going to be a time strategy trade, but it didn't quite have a high enough score. So if you take a look at the chart, looking at the sideways move here, you'll see that kind of just hanging in there. So you might look at that and say, maybe you got out just a little too early, but it looked like maybe it was rising up towards 15, but then it came back down. And even though the AI score wasn't as high as normal, so far it's panning out beautifully, which is what's really cool about using a system that has AI infused in it. And it's legit AI. It's not, you know, there's a lot of stuff that's claiming to be AI that's not really true AI that continues to learn. But this is. So pretty interesting there. I just thought I would share that with you so that you could see it. Looking at our past case studies from TradeFinder back on November 22nd, we had looked at Monster Beverage, and we knew it was a bit overbought when we looked at it, but it came down, and we looked at this last week, and we're kind of exactly where we were last week. It's held in above 100. So even though we're down a little bit from where we first looked at it, so there was the when we first looked at it, and here's where we are holding 100, and I still stand by that from what we talked about last week. As long as it can stay above 100, I think you stay long here, because this can be an area where money flow and a rotation of money where this could turn and move back to the upside. But 100 is the key. So stays above 100, hang in there with it. If you're long this one, if it breaks below 100, that's the exit, get out. And then taking a look at this, boy, this one, these are the fun ones. So we looked at this on 2 weeks ago, December 6th, and this was a downside trade. You can see we had a nice 5-wave pattern to the downside, just barely got above the 38. In fact, if we hadn't had that big open there, we'd have been right at the 38.2% level. And our target, I wrote down in the notes, was 210, and man, we just blew right through that. So I hope you followed that one and did really well on it, because that's a nice downside trade, kind of going along with Tesla, I guess. It's following along the same area there, same sector, but nice downside trade. So we're going to close that one off. That was a really nice gainer. Again, I hope you all followed that one. So hanging in there on Monster, great trade on Lithium Motors. And then taking a look at Netflix, we thought we might get up to 340, and then we had a not so good day there on the 15th, where we came down to 280, but we've held that level, and so this one clearly would be underwater. But even though we're below the 10-day moving average, as long as it holds 280, I think we stay there, because that's where support resistance is. If it breaks that, then just say, okay, that was the end of it. That's the end of the move. Notice the tap box is now gone. So that's concerning, but 280 is support resistance. We did get back above the 50-day moving average today, even though we opened below it. If we can get back above the 10-day moving average at 300, you know, perhaps we make another run here. It looks like some profit taking occurred there moving into the end of the year. So people wanted to say, hey, that was a nice gain, I'm going to go ahead and take it. But you can see we gapped up, we came back, filled the gap, and we've continued to move higher. If we look at the DMI, you can see there was a crossover there with a negative directional indicator, but the ADX has gone down. So when you look at this, you can see this move lower here, but the ADX has gone down, and the ADX doesn't give you direction. It tells you strength of the move, and it's telling you that really there isn't a lot of strength in this downside move. So let's hang in there with that one too, as long as it stays above 280. That one's certainly not as much fun as the lithium motors one, but who knows where we are when we talk again. By the way, before I forget, there will not be a TradeFinder next week. We're going to take the week off between Christmas and New Year's, and then we'll get back again the first Tuesday in January. So enjoy your holiday week. We'll talk about that at the end, but I just don't want to forget that. So no TradeFinder next week. All right, with that, Zach, go ahead and open it up for some questions. Give a little few extra minutes here, some bonus questions here in the holiday edition of TradeFinder.
Sounds great. Yeah. And happy holidays to everyone out there joining us for this live stream. So we'll start out here with a question from Brian. Hi, Rob. Look forward to TradeFinder every week. What are your thoughts on ADBE?
Adobe?
Yeah.
Well,
and while I have you, are we going through another case study consideration for this week or for the upcoming week?
Yeah. Thanks for no wonder we had extra time. Yeah, I need to do that. All right. Yep. Appreciate you the reminder there.
I have to give John a shout out for that one. It was on my mind, but I wasn't sure if you just wanted to do extra Q&A time. So,
Nope. Just I guess I was just excited about the Q&A. So with Adobe, you can see that wave 4 at 67%, still technically a qualified downward pattern, but this one is just in a trading range. And does it break below it? The key here, anything, but I just don't think you do anything here other than perhaps a butterfly. It looks like a pretty nice 320, 360 butterfly, really, because there's good support at 320. There's good resistance at 360. I don't know that you're getting any kind of volatility. It's picking up. So, maybe you could pick up some IV there, but you go long if it breaks above 360, you go short if it breaks below 320. And right now it's just staying in that range. So that's a hard one to give a reading on. It just, not only is it range bound between 320 and 360, but it's range bound between two really strong levels. Good support at 320, good resistance at 360. So it's found an area that makes a lot of sense. All right, let's see if we can find a case study consideration for tonight, since I forgot that earlier. And wow, we actually have one impulse. VeriSign. Let's see what that looks like. Well, I don't like that. The DMI is not good enough there. So you wonder, well, why does it show up as a search if the DMI hasn't qualified yet? Well, I've set the search up like that purposely because there's times when you can see the ADX has broken above the negative directional indicator. There is separation between the two directional indicators. It's moving to the upside in a wave 3. All that stuff is good. And so when that's setting up, I like to look at it ahead of time. So the search finds them before the ADX is actually broken above 20, which is the entry signal. And so I can put that on a watch list and keep an eye on it each day and see if it triggers and moves to the upside. So that one hasn't triggered yet, but certainly is interesting. And you got to be impressed with how well it's held in there with what the market has done over the last few trading days. So from that standpoint, boy, if we get that ADX to break above 20, that might be something. So I'm actually just going to go ahead and put that on the watch list now. If ADX goes above 20. So I'll keep that on our watch list for next week. Let's see. In commemoration here of the completion of our zigzag mastery class, let's see if we can find something within the wave 3 search that might look pretty good. As you can see, there's absolute tons of them here. So how do we filter that down a little bit? This will just take a few of them out, not that many, because usually if you're in a wave 3, the positive directional indicator is above, but at least we know that we have something working. So let's see what we can, well, let's look at PDD. Yeah, that one looks like it needs the positive directional indicator to make another run. We got the ADX right at 40. So that one might be taking a bit of a pause. So let's get off that. Ross Stores. If any retailer is going to do okay this time of year, you would think that might be it. Was that an earnings report? That gap up? Let's see if that was an earnings report. Look how strong the ADX is. Yeah, it was. And that's not surprising, is it? The issue here is, gosh, the ADX is so high. It got to 60. I think that one may have done what it's going to do. So I think we got to let that one go. See what else we can find. Silk Road Medical, what an interesting name they picked. Wendy's, take a look at Wendy's. Fast food, we did well on Yum Brands. That one's had a nice run too. Another really strong ADX. Boy, I don't like the fact that some of these good ones are looking like they're ready to roll over. That's not positive at all. Like some of the moves ahead of time. Let's look at Toll Brothers. I don't really know why, but some of the home builders have rebounded a bit. Not sure I get that. And you know, you look at that and that doesn't look so bad. Where's the fundamental reason for that? Somebody tell me. With interest rates, I don't understand it, but that's why we don't focus on the fundamentals. We look at them as support for what we see on the technical patterns. That's pretty good. So you had a big move up, came down and filled the gap. I don't know how comfortable I am with this one, but that's a darn good looking DMI. Money flows steady. All right, well, I would definitely put this one in the speculative portfolio, just because I don't understand it. But you know, there's other ones that I've not understood either. Like, but some of them are starting to break down. Like HZO, we have an alert on this for our subscribers, and I haven't understood how that one's held in there, but it's finally breaking down. It's finally starting to do what it's supposed to do. RS, that one too, it's starting to come down. It's found a little support at 200, but it's finally breaking down. So just maybe some of these have just been really stubborn. But let's do Toll Brothers for our case study consideration. I'll be as interested as anybody to see what that does between now and next week when we get together. Didn't really think we'd be putting a upward arrow on there, but you know, we could look at something bearish. No, we can't either. There's nothing. So that's it. All right, now back to the question, Zach.
All right, no worries. Yeah, I got a kick out of that Silk Road Medical that you pointed out too. That's actually a medical device company out of Cali, not to be confused with the Netherlands, which there's some serious crackdowns in the Netherlands as well, but that's a conversation for another time. So Abu would like to look at TLT, and Win for You says TLT should be going down after that BOJ move. So with the Bank of Japan yield shift.
Well, That would be correct. And it is going down. The problem is, it's bam, bam. We're a bit oversold now. Below the 50-day moving average, are closing right on it. But the separation here, and this doesn't get very far away from it. This is the epitome of my expression: no security in any time frame gets very far away from the 10-day moving average. You had some separation there, it immediately got back a little bit above it and right back, a little bit above it and right back. Now we're a little bit below it. So I think I would have to be a little bit nervous about it following through to the downside over the next couple of trading days. Maybe let it bounce just a little bit, perhaps back to the 10-day moving average. But I might be getting a little too picky there. But it just looks a touch oversold short term to me, and that separation from the 10-day moving average really seems to matter. So maybe it rests for a day or two, and then you can look at it again to the downside. But I would agree on that. That looks pretty darn good to continue lower. Actually, just maybe not over the next day or two.
Very well, and some positive feedback here to share with you. S&P says, Rob, thank you for sharing your day trading a 3-minute chart strategy with the DMI and CCI last week. I've been testing it and like it quite a bit. Nicholas has also said, hi, Rob, been using those tips you gave me on day trading, working great for me. Thanks a lot. Wondering about CCI average that you mentioned previously. What time period do you use for that CCI average?
Just the, I don't change that. I know oftentimes I'll adjust the settings, but the 14 and 9 that it comes with, I keep that. So the short, for the shorter term, it just seems to work really well. I'm really happy to hear that. I would reiterate, get good at it. Keep doing what you're doing. It works amazingly well. It truly does. But day trading is difficult, so hang in there with it. And I'm excited to hear that. And we're going to be doing some really cool stuff next year. So stay tuned for that. But along those lines. But I'm happy to hear that. Appreciate the comments. Thank you.
Absolutely. Yeah, an exciting year ahead. All right, Steve.
Boy, you're not kidding. There's so much happening next year. It's insane.
Oh yeah. I'm very much looking forward to it. Steve would like to look at good old Meta.
Poor Meta. Well, I guess nothing looks as bad as Tesla's chart, right? So the fact that it's gone sideways, you would have to look as a positive. The wave 5 here, and then you're wondering, well, can we get someday we'll get back to that previous 4, but I don't think that happens for a while. Really nice consolidation through here. I don't know what the catalyst could be, because even they talk about how far out into the future it's going to be before they start realizing a return on the investment that they're making. They realize that it's a long-term thing. It's way out into the future. So this could be another big butterfly. Usually don't want to go too far out in time on butterflies, but between 100 and 140, it sure looks like it wants to stay there. I think that could be a really good butterfly. The negative, the fly in the ointment, if you followed us, is that ADX is diving down, and usually you're getting ready to move when that happens. But you've still got a pretty good range here with a big wide window there on the butterfly. And then if you break above 140, you get out. If you break it below 100, you get out. But I think it wants to stay in that range for, it could be quite some time. It may just be, they call it dead money, but it's not if you've got like a butterfly or credit spreads or something along those lines on where you're capturing time decay. But you got to hurry up, because the longer it goes sideways, the less premium is there for you to capture. That's it. I know I kind of ended that on a weird
just wanted to make sure.
Yeah.
So a couple symbols for you from Eric. First one being LECO, and Susan's also shared a link for platinum ETFs. So I'll get back to you on that.
Oh, thanks. Well, you know, if you wanted to take a speculative shot on something here, I don't know if the person asking is looking long or short. It is below the 10-day moving average. It tapped it on the high today, but back-to-back days where it's held 140. Now the negative is it's traded higher throughout the entire day and then held there, but it has held there. And if you want to just take a potential bounce to see if it could hold the bounce, if you want to be conservative, you got to wait till it gets back above the 10-day moving average. But if you want to be super aggressive on this one, you could take a shot, because if it breaks below 140, you just get out. Or you flip and go bearish, because if it breaks below 140, it's highly likely to come down here to 125, because there's no resistance in the way on the way down, nothing to stop it. So it needs to hold 140. You know, everybody can see this chart. If it goes below 140, you have the reverse of this better than 45-degree angle move to the upside. There's nothing to support it coming down, so it would likely tank. So they're going to try to hold it there at 140. So maybe you get a little bit of a quick bounce and come up and fill that gap right there. So yeah, pretty interesting chart there. Thanks for bringing that one up. It's not one we look at very often.
Agreed. And the second one for Eric is KTOS.
Well, I'd be interested to see this one, because it's in an area where could very well find some defense and security. You would think would be a sector that would look to find a bid if things do start to get a bit squirrelier after the first of the year, which I think they are. I think it's going to be a challenging first quarter to the year. And you've got really good support there at 9. So there's another one you could take a shot at. Now, this one did break above the 10-day moving average today. I think you could easily run back up to 11 here, maybe even back to that previous 4, which should happen with a 46% wave 5. I like that one for a speculative trade too. So I like both of those symbols that it came up with. And this one, if it breaks below 9, you get out, but man, it hasn't been able to break below it, and it's tried hard. So from a risk to reward standpoint, that's about as good as it gets right there.
Yeah, I agree. And just quickly to let you know, for those ETFs, there's physical platinum shares, PPLT on the NYSE, Granite Shares Platinum Trust for PLTM, also on the NYSE, and then Bloomberg Platinum Subindex Total Return, PGM, on the NYSE.
Yeah, I know about all 3 of those, and none of them are optionable. So, but I appreciate that. Appreciate the bringing the symbols up. And I'm familiar with those, but I was trying to find something that had options for people who like to trade options. But those are all
one more that's just more general, not as specific on platinum, for iShares MSCI Global Metals and Mining Producers ETF.
What's this? Do you know? Do you have the symbol?
PICK, PICK.
Oh, let's see if that one has PICK. Let's see if that one has options. PICK for platinum. That's an interesting symbol.
It's Global Metals and Mining. So.
Oh, okay. So it's included in there. Well, that might be a way to do it. Let's see. Oh, there you go. All right, good on you. So I don't think that's exclusively platinum, but maybe that's a way that you can, because nothing else is optionable. Spread's a little bit wide, but I think you can find something in there that's not extraordinarily wide. It looks like there's some that are, I don't know, there might be something doable for you in there, but thank you. Thanks for sharing.
All righty. And so we've had a few requests, multiple requests for SLV, and Rodney has asked, is there a zigzag pattern in it?
Well, we looked at it earlier, but I'll look at it again to see if there's a zigzag. Yeah, I figured this one was coming, so we maybe that question came in before we looked, but on the zigzag part, there's yes, there's a zigzag, but would we trade that one? No, because it didn't make it to 38%, and got to be good. It worked perfectly, so it's easy to say, look at that zigzag, and it hit its target, but we wouldn't have gotten in it. So we got to stay with our rules. That one, no, that one worked. So you could have gotten, there was a great zigzag back there in November. So you had a 57. People are like, well, how do you know when to get in? This is a perfect example here. So you look for some sort of an impulse move, which that clearly is, and then the correction. Measure the correction. Are we in the area of 61.8? Well, we passed 38.2, we passed 50. So you would have been in either one of those levels and watching this, and then it ran up, and look, it just ran straight to 161.8. It didn't even really stop at 100 just for one day. And then it went up there, came back and tested it, and now it went up, and that's probably 261.8 is probably where that went. Turn this on and put it on 261.8. You don't see them go that far very often, but every now and then they do. So, yep, there it is. Look at that. So right at the 261.8. That was just a guess. I had no idea. I haven't looked at this obviously ahead of time, but there you go. And then, so for that zigzag, you take that one off. You would have still been in that one if you'd have been back in November. But then right here, so we had a complex C wave there, and that one went to 100%. So you had multiple zigzags there. And within that one, is there another one? Looks like it. Yep. And so still a little bit more to go. So yeah, there's multiple zigzags there. One of them wasn't qualified. All the rest of them are. So there are multiple opportunities. Again, that's why we did the zigzag mastery and wanted to share that with you. It's awesome education. It's the way you want to trade directionally, in my opinion, especially within Elliott wave and especially within the wave 3. So it looks like 2264 is where we're going. Gosh, I hate to hear that. We may hit that before we satisfy the overbought condition. I'd like to see it come down first so that we could take advantage of that move. But that's the way it goes. It was below the 10-day moving average Friday, and so we missed today's move. And I was lamenting about that on Friday. I had no idea the Bank of Japan was going to do what they were going to do, obviously, but or yesterday, excuse me, yesterday, not Friday, yesterday. So anyway, a couple more and we'll send everybody off for the holidays.
Sounds like a plan. Thanks for going back over that one. Mike would like to look at LQD.
That's a good one to look at. We've been talking so much about bonds. So holding the 50-day moving average, as with TLT, a bit oversold right now. So how long can it stay there? Gosh, if this all starts to tank down like this, I don't know how the equities market, can rally in the face of that. If we get an end of the year rally, I think that's a bonus. And I just really feel like the first quarter of next year is going to be tough. I think it's going to be challenging. And the bond market is not helping right now. One more.
You got it. So we will, since we're gonna have insiders this week, I'm gonna go with one from YouTube, and NerdRX would like to look at GLDG.
So we'll go with the miners then, and not quite the same bounce that we got out of GLD, but I understand why everybody's interested in the metals tonight. We always talk about that. I mean, this has been going on for weeks now, that TradeFinder, our insiders with our alert subscribers, people asking such amazing questions. And just to let everybody know, as Zach said in the beginning, in the insiders, we do an extended Q&A, and you get some great questions from our subscribers. They are in tune. They know what's moving. And it's been great finding stocks that are in sectors that are moving. So if you've ever thought about being an alert subscriber, I think we're going to see some volatility next quarter, and it's going to be a lot of fun the beginning of the year. So hanging in here at a 1.25, I think that holds. You know, you've got the concern about these gaps here with this big move to the upside. But if the bid in the metals holds, I think this holds, and you could get a bounce. You might go back and test that high, that wave 4 high, and it's still technically a qualified wave 5 pattern. But I think in the long run, that's going to get disqualified just from the fundamentals of what's going on around the world. Thanks, everybody. Appreciate you tuning in. You know what I say, time's the most valuable asset we all have. I'm really passionate about that and the appreciation that you spend some of your valuable time with us. We try very hard to make it an informative, educational use of your time. Happy holidays to everybody out there. Hope you get a chance to spend some really quality time over the next couple of weeks with family, friends, and loved ones. Happy holidays.